Something huge is quietly taking shape in the world economy. A new alliance, led by China, is emerging, and it could genuinely change the global balance of power as we know it. So let's get right into it and see what the source material has to say about this massive shift. It's the kind of question that used to feel, well, academic, right? Something for the distant future. But according to the analysis we're digging into today, this isn't a theory anymore. It is happening right now, and it's being driven by a really powerful new coalition. And here's the number that makes you stop and really pay attention: $25 trillion. To put that into perspective, that is bigger than the entire economy of the United States. So we're not talking about some small regional club here. This is an economic superpower in the making. So what exactly is this new bloc? In this first part, we're going to break down who the key players are, the incredible scale they operate on, and, what are the shared interests that are actually holding them together. Okay, so here are the core members. You have China, obviously the economic giant. Then you have the ASEAN nations. That's a block of 10 really dynamic Southeast Asian countries. And then you have the energy powerhouses from the Gulf Cooperation Council. Think Saudi Arabia and the UAE. What you're seeing is a coalition that links manufacturing, tech, and energy in a totally new way. And this is where you see the sheer momentum. According to the source, this group now drives 55% of all global economic growth. The key takeaway here isn't just that they're a part of the world economy anymore, they've become its main engine. For years, we've all heard about the BRICS countries as the big challengers to the West, but the source material we're looking at argues this new alliance is totally different. While BRICS was often more of a club for meetings, sometimes held back by its own disagreements, this new thing, well, it's a coherent economic system, and it's built around very real shared interests in trade and energy. So the big question is, why is all of this happening right now? The next few slides dive into the catalyst that the source material points to: a growing perception of America's fading influence on the world stage. According to this analysis, the main driver was an inward turn in U.S. policy, especially when it came to trade and tariffs. This move towards protectionism didn't just affect China. It created a vacuum that pushed even longtime U.S. partners to start looking for other options. And that set off this global scramble for alternatives. As you can see here, the EU moved to strengthen its ties in South America. Export-heavy countries like Vietnam rushed to sign new deals. And get this, even close U.S. security allies like Japan and South Korea started building their own economic networks across Asia, completely independent of Washington. All right, let's zoom in on Southeast Asia because it gives us some of the clearest evidence of how supply chains are being redrawn in real time, pulling the world's economic center of gravity eastward. Let's just use Indonesia as a quick case study. As this chart shows, after U.S. tariffs hit, its trade surplus completely collapsed. The source says it plunged to a 5-year low of just $160 million. For an economy like Indonesia's, that is a massive, massive shock to the system. And so, what happened immediately after? Well, Indonesia went looking for new partners. Its imports of essential machinery and equipment from its neighbors, China and Singapore, jumped by more than 20%. The pivot was fast, and it was decisive. And you see a really similar story over in Vietnam. After U.S. tariffs on steel were doubled, its exports to the States just cratered. They fell by 27%. Imagine a quarter of your main export business just vanishing overnight. When that happens, you've got to find a new buyer, and you've got to find one fast. And this isn't just about abstract numbers on a spreadsheet. These new connections are physical, they're real. We're talking about new cargo lines directly linking Malaysia to inland China, massive infrastructure projects like high-speed rail in Indonesia carrying millions of people, and new generation trade deals that focus on the future, things like digital services. All of this is cementing these relationships for decades to come. Now, this realignment goes even deeper into two areas that have really defined global power for the last 100 years: energy and infrastructure. According to the source, this new bloc is now building its own independent systems for both. For decades, oil being priced in U.S. dollars gave Washington incredible global leverage. But look at this. The source indicates that today, around 30% of Saudi oil shipments are already being done in other currencies. That tight grip is visibly loosening. And this was a landmark moment. A major transaction for liquefied natural gas conducted entirely in the Chinese yuan. But here's the crucial part. It wasn't just China. A major French energy company was involved. That tells you that even Western firms are adapting to this new reality. So you might be thinking, okay, but what about the future of energy, renewables? Well, the source argues that whether the world runs on oil or on solar panels, Beijing is positioning itself right at the center. By producing 80% of the world's solar panels and dominating the battery supply chain, it essentially controls the key technologies for the entire green transition. So, what does this all add up to? Let's zoom out one last time and look at the huge geopolitical implications of all these trends. Are we really watching the dawn of a new world order? Just look at the deliberate long-term pivot happening with the Gulf states. For decades, they were seen as firmly in the Western camp. But now, they are systematically reorienting their entire economies toward Asia, with clear, ambitious trade goals that show this isn't a temporary thing. It's a strategic, multi-decade shift. And this is really the ultimate outcome that the source material describes. What's being built here isn't just a trading bloc, it's a parallel system. A system with its own supply chains, its own currencies for trade, its own infrastructure, one that can operate entirely on its own, independent from the West. So we end with this really powerful, forward-looking question from the source. It suggests the debate about if this parallel system will rise is pretty much over. The real question for the next decade is, who else joins? What other parts of the world are going to be drawn into this new orbit? It's a fascinating and frankly a critical question for all of us.